I'm Olivia Voznenko.
I'm Stephen Guilfoyle.
And you're watching Street Smarts
At Modern Wall Street.
Oh, are you having fun? How could you not? We're here with Stephen Guilfoyle.
That is me. We're here with Olivia Voznenko.
And we're going to talk markets. How does that sound?
I think we should. It's Tuesday, and Tuesdays are market days.
And Tuesday is a red day. Wah, wah. I mean, unless you're trading volatility now, you like it. But looks like the power of the Powell interfered. No?
It's not a serious red day. It's coming after two really positive days in a row, back to back. The algorithms are designed when they have such big profits in one direction to go the other direction on the third day. So it's not a big surprise. Well, let's face it, Powell was optimistic. He was optimistic on the economy. He was optimistic on the prospects for inflation, where in the past, if Janet Yellen or Ben Bernanke were to say, I see 2% inflation in our eventual future, everybody else was like, maybe not. That doesn't sound too convincing. This guy's a businessman, so he's more straightforward. He's more practical, and they believed him. Okay,
so I'll look at it as a businessman, woman. I mean, taking a look at equities, the fact that they're getting a little hit today after he took the mic, could it be because 3%, doing nothing? You can make money on that than trading equities. Sounds like a good deal. Sorry, 2.9%.
Well, you got the 10-year above 2.9, and the spread between the 2 and the 10 is probably bouncing around 63, 64 basis points right now, which it was up in the high 70s back during the flash correction. But for much of the past year, when the market was soaring, that spread was down to about 0.50. So it's actually in a better place for the financials, and you've seen the financials move higher, along with tech in the recent moves to the upside. I think we do want the growth that we're seeing in the markets. I think that the economy, though we've seen some of the macro points stumble a little bit, it is moving in the right direction for now. And we didn't just hear this from Powell today. We heard this from Randy Quarles yesterday. Generally speaking, we're probably in a pretty decent spot. And though volatility will be introduced to the marketplace as the Fed withdraws their accommodation, which is only right, it's going to take some getting used to. And some people are probably going to get shaken out in both directions as we move on.
Yeah, and as we're entering, we're letting go of earnings season. We're going to talk about technicals and fundamentals, but we can't forget those hashtags. And now politics are getting involved with the boycott NRA hashtag and how companies are now getting involved. Is this a smart business move?
Well, that's basically up to the boards of those companies. I mean, if they know their clientele, then to embrace a cause one way or the other might make sense for them. Now, they're going to annoy one side. A company such as Hertz knocking out the discounts for NRA members, or I think that's what they did, right? So they're going to annoy the NRA side. The NRA side might not frequent Hertz as much, but they might be embraced by the liberal side of this cause, which they might deem to be a larger group at this point.
That's what I'm saying. These boycotts, it seems like you'll be more successful if you can commercialize, I hate to say it, a left-wing.
Well, politics have seeped into every corner of American society right now. I mean, let's face it, I don't agree with everything the NRA says. I am a legal gun owner. I do believe American families have the right to defend themselves, but I don't think you should have the right to own a machine gun or turn a weapon into a machine gun. I don't really have a problem with an assault rifle, because assault rifles, let's face it, they are rifles. They are not automatic weapons. But I don't think everyone should be allowed to buy one as soon as they turn 18. I do think that the left does have a couple of points here which need to be listened to and maybe need to be compromised on.
Well, Stephen, you know what? You're getting really heated right now. So heated, I think it's time. It's time for
Market Rush. We had a request last time we were on to speak about options and how to use them properly. So I was going to discuss my position in General Electric, which has been in the news a lot because I did a couple of trades. I initiated a couple of sales, I would say, in the options market regarding General Electric in order to reduce my net basis cost in the wake of these revised earnings and the other negative news that's been out there regarding some investigations. So basically this morning we saw a pop in General Electric. It ran up above $15 for a little while. When it was up there, I sold calls that expire in 3 weeks. I sold $16 calls because there was a little bit of a premium to it. Usually there's not that much premium in the GE market, so you really have to take advantage when you get the chance, when the market comes your way. So I sold about calls that represent maybe a third of my long position to reduce my basis by about maybe 20 cents on those shares. And as it came in, I also sold $14 puts on a portion of my position, which if I get run over there, I'll have to pay 14 for these shares, but that would reduce my average price, which was already below 18 and a half. But this way, I'm knocking down my net basis costs on both ends, which I've done before in this name to get my net cost that low.
And now, are you looking to unwind this position, or are you long it?
I'm still long General Electric, the equity.
That takes a lot of guts to say, Stephen.
The stock's dividend is still too high for what they represent right now. For some time, I felt that $15 was the right price per a breakup of some kind. I do think they hired the right executives for the board. I think they have some talent there, but I think this is going to be a long, tough hoe, and I think you're going to have to manage the position, which you have to do. I got into General Electric when Warren Buffett, when it became apparent that Berkshire Hathaway had gotten out. Because I thought that
Are you serious?
Well, yeah, because I've gone contra the big names often in my life, because when they're out of the way, usually a big side of price discovery is changed. So, and it's worked for me on and off, mostly on, for most of my career. In this case, it didn't. Warren Buffett was absolutely right about GE, and it went the other way.
How is that possible?
But selling these calls and these puts, as I've done all the way down. Now, I've sold calls. I just had a whole bunch, half my position's worth of calls expired this past Friday. I just keep rolling this over and over because there has... Unfortunately for the GE shareholder, there has not been much opportunity to be called away. So this has been a consistent way to reduce your net basis cost. Otherwise, you're just going to take it on the nose. And a lot of smart guys have been selling their General Electric. So we are on some pretty thin ice here.
I can relate with GE. I know what it's like to be sitting by the phone waiting to be called. But you know what I do? I do some shop therapy if he doesn't call. So retail earnings this week.
I just recently bought some Walmart, getting back in. I sold some Walmart back a ways when they had that one day where they announced some wage increases for little people, but also laid off a bunch of little people.
Okay, so that was a little consumer activist selling.
Yeah, I was a little bit. I got a little angry there because I've been the little guy in my life, and I still am to some degree. And so when I saw those people show up for work and there was no work to be had, with no notice whatsoever, I really got angry at a firm that I had been behind all year long. I've been touting Walmart and Kohl's. Those have been my two retail players all year long, and they both have been great for me. So that forced sale that I made on about half of my position that day, actually, even though it went up in my face the next week or so, it actually turned out to be a pretty great sale, and I just started getting back in, reestablishing that long position yesterday, as a matter of fact.
But technically speaking, wouldn't you say there's some bullish formations in retail right now? Just taking a look at XRT, I think there was a good one in Target.
Yeah, I mean, I think you have to be especially careful. I like Kohl's. Kohl's is reporting, I think, tomorrow, actually. I like Kohl's, and it's up a lot this year. But I like it because they're the ones who kind of I liked Walmart because they confronted Amazon. They said, we're going to fight you to the death. And I like that in a company. But I like Kohl's because they kind of made friends with Amazon. They said, you know what, we'll be your little buddy if you don't kill us. And they accepted returns in the stores. They sold Amazon products in the stores. I frequent a lot of retail locations, and I watch management. I watch how they behave. Before the advent of the internet, I actually used to do my own CPI that way by walking around and looking at price tags. But when I'm in Kohl's, I actually see a store that's more well-managed than a lot of other locations that I do attend. So I do like the firm even on its own merits, but the fact that they've found a way to coexist with the big bad industry killer, I think that's a real positive. And I think that Jeff Bezos probably sees the way they're managed as well. Now, I'm not trying to start a rumor here, but if Amazon were ever to grab a nationwide outlet that is not tied to the mall, well, why not be one that they already have a relationship with? You know, as a trader, I basically trade Kohl's and I trade Walmart, but I'm a 50-something-year-old guy. And my advisor on these trades is a 50-year-old something woman, my wife. Where, from a young woman's perspective, should I be looking in this field?
Oh my God. I mean, I'm just letting you know, when I shop, I avoid the malls like the plague and politics mixed together. See, honestly, I'm all about single stores with easy to park that you can get to quickly. I like Ulta. And to be honest, I have a Kohl's right near me. They don't really have the most fashionable items, but I'll run in there.
Yeah, okay. So you're okay with Kohl's, but it's only in a pinch.
Correct.
It's more for women my age.
Right.
Very interesting.
Okay. Any other economic data as we finish up?
Well,
GDP, yeah, you.
Well, we got GDP coming up, and you're going to see a little bit of a downtick there from what we saw 2.6% for the first look at this quarter. I think it's going to come in maybe 2.5. I think you're going to see, because of the revisions to the retail sector that we've seen for the fourth quarter, the holiday season wasn't quite as good as everyone thought it was. Everybody said, wow.
They're still saying it was good,
Retail
too, by
was
the way.
back. Well, it wasn't quite as good. So you're going to see the PCE part of the GDP come in a little bit, maybe ratchet it down. It's still a decent quarter. 2.5%, if that's the number we get, that's still not bad compared to what we've been through. Let's be realistic. We were considered a 2% economy for a long time, if that. So a couple of quarters where we were 3+, now at 2.5. Maybe we can jack that up, get it closer to 3 with the tax cuts as we progress further into the year. I don't think that's the end of the world, but that is the headline event going into the end of the week. All right, and we also have PCE this week, which I think is Thursday. If you take a look, you'll see the core rate.
Thursday.
Yeah, core rate was 1.5. So that's very low. Even though Jerome Powell and Randy Quarles do see some inflation coming later this year.
And they're buddies.
Yeah, they are close. It's kind of like with John Williams. You used to look at him as maybe a sounding piece for Janet Yellen. Well, Quarles might just be a sounding piece for Powell. They have a relationship and they are considered friends. And they both see inflation. Although we don't see evidence of it yet, we've been relatively assured that it is coming down the pike. Mm-hmm. So that'll be a big indicator for the week going forward. If you see a hot number come in for PCE, you will see that 10-year head for 3%. And you will see the market, at least for that morning, take a little bit of a hiccup.
Yeah, exactly. And go into bonds, enjoy that 3%.
Enjoy that 3%. Just keep, but you'll also see the 2-year move because the short-term rates will move on the idea that the Fed will be forcing in that fourth rate hike.
All right, I think that does it for Street Smarts. What do you say, Guilfoyle?
At Modern Wall Street.
See you next Tuesday.
See you next Tuesday, Voz.
Cool.